Welcome back to the Pro Ticker Podcast, your Monday morning edition covering major financial magazine headlines, everyone.
Good morning. Lots to unpack this week.
Absolutely. We're doing our deep dive today, trying to connect the dots on the big financial stories breaking right now, give you a clearer picture of what's moving things.
Yep, we've got stuff from MarketWatch, CNBC, Reuters, CNN Business, Bloomberg,
Yeah.
basically covering May 16th through the 19th, so pretty current.
And it's an interesting mix, isn't it? It felt like last week maybe started with a bit of optimism, maybe a trade truce feeling.
Right, there was that sense, but then boom, a credit downgrade and renewed talk about tariffs. It's definitely added some static.
Exactly. So that's what we want to get into today. We'll look at Moody's downgrading the U.S. credit rating.
Big one.
Yeah. And Treasury Secretary Bessent's reaction, plus his comments on maybe bringing back those tariffs.
And how the market took all that. New stock futures, treasury yields, the dollar.
We'll also touch on U.S.-China trade stuff. NVIDIA CEO Jensen Huang getting a big welcome in Taiwan.
Oh yeah, the Gensanity.
Right. Then Xiaomi's new EV, Trump's comments on South Korea, and tariffs.
Foreign holdings of treasuries, that intersection of AI and robotics.
And that interesting dinner with Trump meme coin holders. Quite the list.
It is, but I think you'll see how a lot of this ties together, or at least influences the overall mood. It's not just random events.
Okay, let's start with that big headline then. Moody's. They downgraded the U.S. credit rating, didn't they? Down to AA1 from APIA.
That's right. And CNN Business pointed out this is actually the first time Moody's has done this since, get this, 1917.
Wow. Over 100 years. So what was their main reason?
Well, MarketWatch laid it out. It boils down to the growing government debt and the rising cost of servicing the interest payments. They're basically saying the U.S. fiscal picture isn't looking as strong compared to other top-rated countries anymore.
And Moody's was the last of the big three agencies to do this, right? S&P did it way back in 2011, Fitch last year.
Exactly. So in a way, it kind of brings them into alignment, though obviously still a major headline.
Sure. And how did Treasury Secretary Bessent take it? CNBC reported he wasn't exactly thrilled.
No, he kind of brushed it off, called it a lagging indicator, basically arguing it reflects, the situation under the previous administration, not the current one.
A familiar tune from Washington, maybe?
Pretty much. And MarketWatch actually made that point too, mentioning Larry Summers had similar reactions to past downgrades. It's the standard playbook, perhaps.
But does it matter what officials say? I mean, how did the markets actually react?
Well, the immediate reaction Sunday night and into Monday morning was pretty clear. MarketWatch and CNBC both reported stock futures, slipping Dow, S&P, NASDAQ, all down.
And Treasury yields?
Those went up. Bloomberg specifically flagged the 30-year yield hitting its highest point since 2023. MarketWatch and CNBC said it even popped above 5% for a bit.
Okay, so yields up, stocks down. What about the dollar?
Dollar weakened. And gold futures got a boost, the classic safe haven move when there's uncertainty.
Makes sense. So why does this happen? Higher yields impacting stocks? Is that the main mechanism?
That's a big part of it, yeah. As CNBC explained, when Treasury yields rise, it makes borrowing more expensive for companies. That can squeeze profits, make stocks look less appealing.
Plus, safer government bonds start looking better compared to riskier stocks, right?
Exactly. Investors might shift money out of stocks and into bonds.
But it wasn't universal panic, was it? I saw Bloomberg mention UBS Global Wealth Management called it more like headline risk.
Yeah, that's a good counterpoint. Not everyone sees it as a fundamental game changer. Stephen Is over at SPI Asset Management told MarketWatch it wasn't outright panic.
So maybe the market had partly priced this in, given the S&P and Fitch downgrades?
Possibly. Or maybe there's just a belief the immediate economic impact is limited. But CN Business did raise the point that this could fuel that sell America narrative again.
Meaning investors might look elsewhere, like gold or foreign stocks.
Potentially, yeah. It adds to that underlying worry about the U.S. fiscal situation. Definitely something to keep an eye on.
Okay, let's switch gears to tariffs. That seems to be heating up again, too. Secretary Bessent sounded pretty serious.
He did. MarketWatch and CNN covered his comments on the Sunday shows. He warned that those Liberation Day tariffs could come back, maybe as early as July.
If trading partners don't negotiate in good faith, was the phrase.
That was the phrase. And according to MarketWatch, this could mean tariff rates jumping back up to those higher levels from April 2nd, well above the current 10% for a lot of countries.
Who is the focus here?
He mentioned 18 important trading partners. And interestingly, MarketWatch suggested the administration might be looking at regional deals as well.
This obviously hits businesses. Walmart warned about prices going up, didn't they?
They did. Both MarketWatch and CNBC reported that.
Hmm.
Higher import costs potentially passed on to you, the consumer.
And then President Trump weighed in on social media, telling Walmart to just eat the tariffs.
Yeah, that definitely added a political twist. MarketWatch did note Bessent spoke with Walmart CEO Doug McMillon, so there's communication happening, but the tension is clear.
It feels like whiplash, though. CNBC mentioned we just had that trade truce with China seemed to calm things down.
And now this renewed threat could just wipe out that positive sentiment. It shows how quickly trade policy talk can rattle the markets.
And are U.S. tariffs still high, generally?
Oh yeah, MarketWatch pointed out that even with some recent tweaks, they're still at levels not seen in decades. And CNN Business mentioned the possibility of tariffs going as high as 50% if deals aren't reached.
50%. Wow, that would have a huge impact.
Absolutely. Think about supply chains, cost of goods. MarketWatch talked about the broader effect too. This uncertainty makes businesses hesitant. They might delay spending, hold off on hiring.
Which just leads to slower economic growth overall. It's a real drag.
It is. And it makes you wonder how foreign investors are viewing all this. Which brings us to Treasury holdings.
Right. CNBC had a piece saying foreign holdings of U.S. Treasuries actually hit a record high in March. Seems a bit odd given the trade noise.
It does seem counterintuitive. And interestingly, CNBC noted the UK moved past China into the #2 spot for foreign holders. Japan's still #1.
But China's holdings are down.
Yes, significantly. Lowest since February 2009, according to CNBC. They've been reducing their exposure.
So the key thing there, as CNBC mentioned, is that data is only through March. What happens after the April tariff surge and these new threats?
That's the million-dollar question, isn't it? Will we see countries, maybe China especially, start selling off more treasuries? It could impact U.S. borrowing costs if they do.
Definitely one to watch. Okay, let's shift to tech. NVIDIA's CEO, Jensen Huang, in Taiwan, sounds like he got quite the reception.
Heroes welcome, is how Reuters put it. They even coined Gensanity. Apparently there were pop-up shops selling merch with his face on it.
Seriously? That's wild.
It is. And Reuters noted the contrast with how he's often received back here in the U.S. really highlights Taiwan's critical role in the whole tech ecosystem, especially chips for AI.
And that AI focus connects to another piece we saw from MarketWatch, looking at the intersection of AI and robotics stocks.
Yeah, NVIDIA is obviously central there. But the MarketWatch article took a broader view. They suggested this whole AI robotics sector is sort of in the early majority phase.
Meaning it's past the very beginning, but still has a long way to go. Good for long-term investors, maybe.
That's the idea. It requires a longer view. They also pointed out a key economic driver. Robots are getting cheaper while human labor is getting more expensive.
Yeah.
That pushes automation forward.
Did they name specific stocks?
They listed 19. Some big projected growth rates, CAGRs. NVIDIA itself, almost 40%. Then companies like RoboSense and Hesai Group, involved in LiDAR for autonomous systems, were over 50% projected CAGR.
LiDAR, that's the sensing tech.
Exactly. And they mentioned Symbotic too. They do warehouse automation, partner with Walmart actually. Their projection was almost 24%. Gives you a sense of the potential.
And maybe that connects back to trade too. Companies automating to deal with labor costs or supply chain risks.
Could be part of the calculus, definitely. Reducing reliance on labor, maybe mitigating tariff impacts down the line.
Interesting. Okay, another company news item. Xiaomi. They're launching an electric car.
That's right. Reuters reported their YU7 electric SUV launches this Thursday in China. They're positioning it as a Tesla challenger.
Big move for them, moving beyond phones.
Yeah. And Reuters also noted they're launching a new mobile chip and investing heavily in chip design. Seems like a bigger push into core tech and diversification.
Okay, let's swing back to politics and trade, specifically President Trump and South Korea. CNBC talk about his approach there.
Yeah, they called it one-stop shopping, basically bundling trade talks, tariffs, and that thorny issue of defense cost sharing all together.
He explicitly mentioned making South Korea pay more for U.S. military protection.
He did. And while South Korean officials seem resistant to linking trade and defense costs directly, CNBC did say some leading presidential candidates there seem open to discussing paying a larger share.
But what are the risks of that approach? CNBC raised some concerns, didn't they?
They did. The main worry is damaging U.S. credibility. If security guarantees look like they're just up for negotiation based on trade deals, how do allies perceive that? It could backfire geopolitically.
Plus, doesn't South Korea already spend quite a bit on defense?
That's what CNBC pointed out. They already invest a significant chunk of their GDP, so the idea they aren't pulling their weight might be debatable.
Okay, one last rather unusual story. That dinner for holders of the Trempo MP meme coin.
Ah, yes. CNBC looked into that. Based on blockchain analysis, tracking wallets linked to big international exchanges like Binance, it seems most of the top holders invited are probably not Americans.
Really? So who are they?
Well, that's the tricky part with crypto's anonymity, isn't it? CNBC mentioned Justin Sun, the crypto entrepreneur, is suspected of holding a lot. But generally, their identities and motives are unclear. Why hold so much of this specific coin and now get FaceTime with the former president?
It's definitely strange, and CNBC noted the coin itself is super volatile, right? Lots of people lost money.
Oh, yeah. Big swings. While some early birds made out well, many more wallets apparently show losses. And there's that broader concern, which some politicians have raised, about crypto potentially being a backdoor way for foreign money or influence to get close to political figures.
It's a weird intersection of crypto, politics, and potentially foreign interests.
Definitely unprecedented territory.
So, wrapping all this up, what's the big picture for the economy? We saw a MarketWatch piece saying a Trump recession is off the table because some tariffs are rolled back, but
The trouble isn't over. That's the key message from MarketWatch. They expect U.S. growth to slow down sharply. There's a higher chance of sluggish growth, even if not a full-blown recession right now.
they cited a Fed survey predicting pretty slow growth.
Yeah, the Philadelphia Fed survey. Slowest GDP growth forecast in 16 years if you exclude the pandemic dip.
So even if people aren't Googling recession as much,
Right, that search trend is down. But economists, according to MarketWatch, still see a higher chance of a downturn in the next year than they did earlier. And you have people like Jamie Dimon, Stephen Cohen, still sounding pretty cautious.
so less immediate panic maybe, but still a lot of underlying fragility and uncertainty.
I think that sums it up well. The downgrade points to fiscal worries. The tariff talk creates trade uncertainty, impacts inflation, growth, and you see the result in market caution and these mixed economic signals.
Well, hopefully this deep dive helped connect some of those threads for you, drawing on what we've seen from MarketWatch, CNBC, Reuters, and the others. It's definitely a complex picture right now.
Constantly evolving, that's for sure.
Indeed. Okay, that's our time for this deep dive. And with that, we'll see you all tomorrow morning with new headlines from major financial magazines.